Good morning and welcome to the Ask the Expert, an award-winning daily series from 8:30 to 9 to help small businesses. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are on hand. During the live sessions, we'll be running a poll, so please do engage with it and I'll reveal the results at the end. And make sure you're registered for QuickBooks free annual conference, QuickBooks Connect. Look out for the link in the chat. Taking place virtually on the 9th and 10th of March, the event brings entrepreneurs, small business owners, and accountants together to grow and learn and connect. Good morning once again, and welcome to Ask the Expert this morning regarding our topic today. A bit about myself. My name is Dr. Kamran Shaikh, and I'm the founder and managing partner of Morgan Reach. My role and responsibility in the firm is to look at the strategy and delivering of services to clients, ensuring highest level of standards. Quality is at the key of our firm. I qualified as a chartered accountant in 2003, and I also hold a PhD in business studies. I work closely with corporate clients in advisory capacity, ensure key strategic and tax planning is at the core of the services that we provide to our clients, and they are relevant to the client's needs. To our topic, managing your business expenses. This is a phenomenal topic, and it's very close to our heart because a lot of businesses that start up in the UK are more focused on getting more revenue in, getting more sales in, and getting more clients in to ensure that they can run the business. Quite often than not, the entrepreneurs forget that they have to run a tight ship when it comes to their expenses and the costs that the business is incurring on a regular basis. And this is extremely important. I think a lot of us know the phrase, a penny earned is a penny saved. Well, here's a little bit of a fun fact. It's often quoted that this was said by Benjamin Franklin, however, he didn't coin it. In his 1737 Poor Richard's Almanac, Franklin delivered the line, "A penny saved is 2 pence clear." And later, in 1758 Almanac, he wrote a version closer to the saying, we know, "A penny saved is a penny got." He never used the word earn. Now that we've got that out of the way, what sort of costs are we looking at? We've got several costs. We've got the cost of sales, which are the costs of building a product and delivering it to the market. And we've got costs that are the running costs. What should we be based and looking at in terms of the overall running of the business? So, cost of sales. If you're purchasing products to convert them, if you're purchasing materials to convert into products and then to sell them, that's the cost of sale. So buying the materials, bringing up to where you need to build them into a factory, then using time and materials, converting them into a product and selling them across. A lot of times when there's hard times and there's a lot of competitiveness in the market, people look at these costs and they want to reduce them. They want to reduce them by getting cheaper materials. Now, this is extremely, extremely important to look at because a lot of customers that are buying your product are looking at your product to ensure that they're getting what they want. If your product's of good quality, they're looking for quality. If your product is placed in the right place, that's exactly what they're looking for. If you then buy cheaper materials, that could mean your product could be of not as high quality as it was before. Now, all the customers that were buying your products will no longer be interested in it because you've lost one key factor of what your product was, which is of good quality. Yes, we want to save money. Yes, we want to increase our margins, but we want to make sure it's not to the detriment of the quality of the product produced, and also the cost reduction doesn't impact the service that you provided to your customers. So where should we look at products, or where should we look at costs? It's very, very important that we understand what sort of costs we have in a business. So we have two types of costs or expenses. One is fixed expenses. The other is recurring or variable expenses. Fixed expenses are things like your property costs, so your rent, your rate, your service charges, light, heat, cleaning, security. These are sort of costs that pretty much everybody believes are fixed. We know as part of what's been happening in the last couple of years with the pandemic, people have started looking at what their expenses are. And a lot of people have stopped working from premises. They've got a lot of their staff now working from home. With them working from home, it's helped them to reduce their property costs. And that could be the space that they've got. Maybe they had 10,000 square foot. They've now come down to 5,000 square foot. Proportionately, the cost for cleaning, security, light and heat, and all the ancillary costs are also reduced as a consequence. It's important to keep on looking at costs, especially the fixed costs, because they're the ones that we sign longer term contracts for. And these are the ones we're sort of tied into. As long as we look at our major costs of what they are with regards to fixed, and we can manage them and not sign up longer term contracts in view of the current economic climate, then we're able to then reduce them, review them on a regular basis. Now, with regards to the variable costs, they're as important to look at as the fixed costs. So how do we manage these variable costs? There are so many things we can do. We've got the ability to use the software to produce the right type of information in terms of what we believe these costs should be and forecast them. Put the forecast into the QuickBooks system, use the QuickBooks system, leverage it, and then manage these variable costs against what budgets you've set. Because if you don't know what you want, if you don't know what your costs will be, it's very easy for these to slide and become higher and higher and get out of control. If you've got a forecast or a budget, you can match them against the budget and see you're on target or you're above. And that's one trigger that's going to help you to ensure that you're keeping an eye out on these costs. And the more you ensure the costs are in control, the more your margins are there. The more you look at the variable contracts and ensure that they're not getting out of hand, the more your business will be profitable. Also, when we're looking at getting new suppliers to do new things or buy new technology, we're always looking at, we'll have several in, and as soon as the business starts to make profit, we take a write off the board when it comes to expenses. And that could be a big problem because yes, we're making more money, we're bringing more customers in and we're making better margins, but if we don't keep our costs tight, it affects our productivity, it affects our efficiency, affects our net margin, the money that's saved for the entrepreneur for the end of the day. What can we do to ensure, or what can we use to ensure we manage these expenses appropriately? So technology is a key. And in current years, technology has been absolutely pivotal in the growth, in ensuring that we have the right bits of software, which we can use to ensure we can manage these costs. And even in terms of production, in terms of preparing the client services, we can also use technology, other bits of software which will make our life easier, other bits of software which will make sure everything links up together nicely. And once it does, we've got better control of it. Right, so I've got loads of questions coming in. Lots of people are asking quite a lot of questions, and I was just looking at that, which is fantastic. Please keep them coming because I will come to them and I'll be answering them one moment as best as I can. Other things we need to look at. A lot of businesses, these are FSB statistics, a lot of businesses that are small businesses do believe that if they have cash in the bank account, it's good enough because they believe that is their profit. That is not always the case because you might have taken a contract out for equipment and you might have taken it out on lease and you've got a long-term lease, which means you still have to pay for the lease. And that's the company's commitment or the business's commitment to pay that, whereas you haven't paid for it. So the money's still sitting into the bank account, but you have a commitment to pay that money over a longer period of time. Granted, you'll have income coming in over that period as well, but we've got to be very careful in terms of managing where we are. We need to be very careful in terms of forecasting where we are, and we need to make sure that we don't become overzealous in our spendings, because if we do that, we might not be able to commit to further growth in the future. If you are saving money, where could you use it? You could use your money in marketing, in advertising, in development of a product. either doing some research and development to bring something new to the market, or working into a niche area, which will then bring you the benefit of being a market leader. A company that's a disruptive technology company who brings and takes a product in which looks at a problem that may exist, but you'll be able to mitigate it. That also is, if you have your costs under control. If they're spiraled out of control, you'd have no money to invest back into the business. With regards to a couple of facts for small businesses. Now, we believe as individuals, as entrepreneurs, all of this technology, all of these extra things that need to be done in terms of system management and development and working with accountants to get this value added, to look at the management reporting of your business, is for larger organizations. What we don't realize is in the UK, at the start of 2021, there were 5.5 million small businesses with 0 to 49 employees, which is 99.2% of the total businesses in the UK. And that's a fun fact. SMEs account for 99.9% of the business population. As a rule of thumb, there's quite a few of us. And if it is, we just need to make sure that we start to look after our businesses when they're small businesses from their infancy. And now, when we've started looking after them, we can then grow them, we can then develop them. And when they develop as larger organizations, because you've got the right platform in place, you've got the right systems in place, you've got the right processes in place, that will help us ensure the business grows sustainably long term. And it will help us to ensure that the business is on a stable footing. So as a larger business, because it has the controls in place, because you're managing your expenses, you've got better visibility, and your chances of growing is a lot more. Further questions in the queue coming in. There's quite a lot of interesting questions here. Again, looking at technology. Back in the day, expenses were put into folders, large folders, and we would have them all the time. Now you don't need to put expense receipts everywhere. They could be online in your QuickBooks software. It could be on a Dropbox. All of the stuff could be saved across electronically, stored. This is important because the more you store it, the better it is for you, because you don't have to go looking for files. We've got a question coming from Selena on Instagram. Selena is asking, I work from home, but need a formal address for registering my company. What can I do if I don't want to use my personal address, as I think that would break my tenancy agreement? Right. Selena, that's a very good question. As I was referring to a lot of people working from home, this is one of the things that a lot of small businesses are looking at. Now, your company, as a small company, first of all, when you're dealing with customers, you don't really want them to know where you live. And also, in some cases, when suppliers and customers are dealing with you, they don't really like to work with organizations that have got their home addresses. For example, if they do a street map for where you live or a street view, they will see there's a house or an apartment. And they'd be put off saying, well, it's a smaller business. And unfortunately, that's the way of the world. The easiest thing to do is you can either, depending on affordability, get a registered office. And a registered office, there's loads of organizations online. And even this is a service that your accountant can offer you, is you could use their address on Company's House as your company registered office address. Also, your service address, which is the address that people out there on Company's House as public data see for you, is also your registered office address. You don't have to show your personal address on Company's House if you don't want to. The beauty of it is, if it's your accountant's office, I'm presuming it's a nice building or it's a nice block of offices. When people look at it, they will assume that you're working in that office, which is a good starting point in that relationship. Also, if you wanted to say, I want to meet customers, I want to meet clients at a particular office, there might be some office space available in the building where your accountants are, or in the whole area where you could have board offices you could rent. Another option is going for what we call a virtual offices. They come with a phone number and an address, and you've got a certain number of hours you can use with these service providers, where you can go and be in those offices, utilize their facilities, and pay them a fee for it. It's always a good option for small businesses to do that, because it is your office. They do collect your post, they do forward it onto yourself, and the beauty of that is you now have a space. If people come across to that office and say, well, I'm here to see Selena, now you're not there, these offices normally have a receptionist, they have a waiting area, and they will say, right, Selena's not in at the moment in time, did you have an appointment? And that looks very, very, very professional. As a small business, as an entrepreneur who's just started up, I think it's a very, very good idea to have a virtual office. It doesn't cost an arm and a leg. These are pretty affordable, depending on what part of the world you're in. And it depends on which area you want to be in. I mean, if you're in London and you want it in Hounslow in comparison to Kensington, the price difference would be quite immense. So do a little bit of research, look around, and you should be able to get a good place at an affordable price. I hope that answers your question. We have another question here from Greg on Twitter. We're a relatively small business, and I've got my first 2 hires. They will need to travel a lot between jobs. How should we go about reimbursing employees' mileage? Fantastic. This is a very good question about expenses. And if we had a 2-hour session, we could go through salaries and expenses and how to report them. But this question is good. We can have a very, very quick snapshot of what we can do. Greg, if you're using QuickBooks as a software, there is a facility in there for timesheets. And when you're doing timesheets, and if you're doing payroll, especially payroll now in QuickBooks Payroll has the ability, the app has the ability for your staff to go in and put their mileage in there. So they could do, okay, if they're doing mileage and they've also got expenses, for example, if they're on the job and they've stayed overnight in a hotel and they've got to log that expense, you can use the QuickBooks Payroll app. And in there, you can go in there, they can put the information in to say, this is what I've spent overnight staying at a hotel, and they can also attach the receipt. And that can come straight across to you for you to approve. The beauty of it is it's all in the system. It's all electronic. There's no pieces of paper flying around anywhere. And the best thing about it, I believe, is the accountability and the ease of use. You can give your staff the app. They can put the data in. They can put the mileage in. And for the first 10,000 miles a year, you'll be paying them at 45 pence a mile for the tax year, which is from the 6th of April to the 5th of April. And anything above and beyond the 10,000 miles, you'll be paying them 25p a mile. If you have a separate arrangement with them, what will then happen is the staff will then go and claim the difference that you've paid between the 45 and the 25 pence a mile from HM Revenue and Custom. It's important that we look after staff. It's important you've got a new business and you've got the 2 hires to instill them with confidence. And you giving them the application for the QuickBooks Payroll and empowering them to put their expenses in for you to review and approve and pay them will give them the confidence that's a forward-thinking business and you're looking into the future, and you'll be a good employer for them for a long time. I'll take another question from Rachel on Instagram. Rachel's asking, due to all the rise in the cost of living, energy, etc., some of our suppliers are raising their prices. I really don't want to pass this cost on to our customers, but I worry our margins will be far too close if we don't. Any advice? Rachel, that is a question that is at the heart of every entrepreneur at the moment in time, every small business. And they're worried that if they increase their costs, potentially the customers might start looking elsewhere, or they might price themselves out to the market. Please, please, please have the confidence that the customers are there because of you. The customers are there because they want Rachel. And because they want Rachel and the service that you provide, If you were to sit down with them, have an effective conversation, rather than just send them a fee note to say it's all increased, have a conversation with them. They are living in the same place as we are. They're seeing the changes that we are and you are as a business. So be frank, be upfront, show them that you care, show them that it's not something that was a strategy of the business. However, due to the circumstances that are out there, you as a business has now had to make that decision. And I'm absolutely sure that they would appreciate what you're saying. They will understand what they're saying, because the service that you're providing to them is of more value than any increases which are incrementally happening that they would have to pay for. The whole point is the conversation, how the conversation goes. The larger clients, it's a one-to-one chat. Maybe get a lot of the smaller clients and have a discussion with them on a webinar, but the strategy is up to you, how you deliver the message, how you deal with them, depending on the number of customers you've got. The whole point is they want Rachel. And as long as you're providing the level of service that they need from you, if you can explain why the costs are going up to them, I'm pretty sure a lot of customers would understand. But it's the method of delivery that's important, how you communicate to them. Right, we've got another question from Craig on Facebook. I run a small construction company in my local area, where often my team have to go out on trips in the van and maybe out all day. Currently, they have an expense allowance, but often they go over it. What do you think is fair for them to include and not? Craig's a fantastic question. In a construction company, there's a lot of expenses that the staff, whether they're employed or subcontractors, incur, and they want the company to reimburse them. It's really difficult to put a clear line across and say these are the only expenses they should be able to claim and no more. There is a whole list of what business expenses are tax deductible, and I think it's available on HMRC's website. The most important thing here, I think, is for us to understand that if there is a business expense that's tax deductible and your staff or subcontractors are incurring that cost, they can then come back to you and you can reimburse them. If there's costs that you believe above and beyond that you should be reimbursing them, then that's the business decision. Be aware that all the costs that you're reimbursing the subcontractors, as long as they've been incurred wholly and exclusively for the purposes of the trade, then you can claim them back. There might be some unconventional costs that are not as easy to understand. They're not as easy as black and white. They're not on that piece of paper that you see from HMRC. Then you have to take a view as a business owner. Are these costs that are directly attributable to the job that they've gone out to? And if it's the case, then you have the justification. You take the call and you pay them. I hope that answers the question. We have another question, moving down the list, from Diana on Facebook Messenger. Diana's asking, I have a property management company that collects rent from my tenant and also fixes things and charges me for the expenses incurred. I'm hoping to find a way to record payment of expenses by the management company on behalf of another entity. Is this possible? Diana, it's not 100% sure from your message if it is a property management company where the property is yours, or are you managing it on behalf of other people? Because it just says my tenant. So I'm going to go with the property management company is a company which has your property in it, which is the property that you own, and the property management company is also your company. Generally speaking, tenants should not be deducting expenses at source. They should be involving the landlord or the property management company and telling them what the issue is, and then you should be going back and alleviating the situation, making sure any issues that are there, they're remedied. If they are deducting rent, then I'm presuming you've got some sort of an arrangement with them, either because you haven't got the manpower for them to be able to go and do the jobs, or you think it's easier, smaller jobs, which they can do themselves without you getting involved. And if that is the case, that's absolutely fine. It's perfectly okay. As long as the tenant provides you with a copy of the receipt, you can then put that copy of the receipt in your books and records as proof that you've paid the tenant, albeit deducted at source, and your accountant can account for this, for the expense that's been spent on that particular premises. But like I said, it's ideal if they come to you and you instruct a contractor, or you, if you have the staff, or if you have the ability to do yourselves, is go and do the remedial works. I hope, and there's a second bit to the question. I'm hoping to find a way to record payment of expense by the management company, which I've just explained, on behalf of other entities as possible. So I think I've answered that question. Anything else, by all means, put it back onto the chat. We're happy to look into it. We have another question from Yusuf on Instagram. Yusuf's asking, car expenses are being categorized as disallowable expenses in QuickBooks. Do you know how to fix this? I do not use the per mile accounting method for vehicle expenses and would like them to come up under car vehicle expenses category and allowable in the tax report. Right. Yusuf, thank you very much. I don't know why it's categorizing as disallowable expenses. It might be something that you might have been setting it up in QuickBooks. It might be a rule that you've set up before. It might be something to do with the system automatically thinking that these expenses should be disallowed. It might be a good point to speak to your accountants and see if they can assist you with looking at why the system's doing that. They would be very, very happy to look into it, because I'm presuming they're working collaboratively with you online in the cloud on QuickBooks. They should be able to help you do that, because I don't know what the detail behind is and why it's doing that. It shouldn't, but there must be something it's picking up which has been coded up in the past, and it's thinking it's a disallowable expenses. Sorry, I couldn't elaborate a lot more on it, but the first point of contact might be speak to the accountant, see if they can assist you with it. If not, we've got a fantastic helpline with QuickBooks, and you can go and have a chat with the guys there. I'm going to take one last question from Hamza on Facebook. We've done an assessment of our outgoings, and there are 1 or 2 expenses we reckon we could bring down, but we need to renegotiate some contracts. How should we approach these conversations? Hamza, absolutely fantastic. This is exactly what I was saying in the chat earlier on, that don't sign long-term contracts. So it's easier for you to go back to your suppliers when you're managing or reviewing your expenses. And that's where you have the conversation is very simple. This is the situation in the market. This is where we are. The business needs to reevaluate expenses. The business needs to relook at what we're spending on, albeit the business wants to work with you and you're a cherished supplier, you're a trusted supplier. However, the business can't afford to pay the costs, or maybe for a short term, you agree a discount with them. It's always good to have a chat. It's always good to negotiate. And if your supplier values your business, and if they're looking at their own costs, and if they can give you that discount, I'm absolutely sure in the current circumstances, they want to keep you as a customer long term. I hope that answers that question. And luckily, we've just had the results for the poll coming. And the poll, for some of you who don't know what it was, do you have an expense management system in place? And I am absolutely surprised, pleasantly surprised with the results. 70% of you said yes, 20% of you said no, and 10% answered unsure. Now, I was expecting a lot of people saying no. So this is a fantastic result. That means people are going and moving in the right direction to ensure that they've got their systems bolted in correctly, so they can have the right reporting and they have all the right data and the backups for the business to grow. So thank you very much for the poll. It's a fantastic result. Again, it's been a wonderful morning. I hope I've been able to answer some of the questions to help you guys, and I hope you've learned a lot or some in terms of managing your expenses. I've had some tips in the short term. Thank you all for tuning in. If you want to get in contact with us, you can email us on quickbooks@morganreach.com or visit our website on www.morganreach.com. Coming up on Ask the Expert tomorrow is validation expert Nana Perry. Tune in to learn how you can validate your ideas and bring your new innovations to life. A reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business advisors and experts are on hand 24/7. I've really enjoyed answering your questions this morning, and I hope everybody has a fantastic start to the week. Have a great day.